How do you know how much you can pay yourself from the business every month? Well, you're in the right place. Welcome into this training on how to use the Paycheck Predictor 2.0 from CEO Finance Academy. I'm Dr. Alex Angar, the chief spreadsheet nerd here. And our whole mission is to help business owners create consistent financial abundance by getting clarity on their numbers, setting up the right systems and disciplines to make it so that their finances can be simple and straightforward. So, how do you get financial consistency? Well, it's making sure that you've got the right processes in place to pay yourself consistently. So this is one piece of this process. And if you want our entire training on how to understand how much you can pay yourself, there will be a link below this video that you're watching right now, an entire half-hour training deep dive on it. So let's dive into this, how to use this thing, okay? With all of our calculators, there are rules up at the top here. So for this one, it's don't edit anything that's not a light blue cell, okay? Everything else is formula-based. And you're gonna need a few numbers for this. In order for it to be accurate, you're gonna want accurate numbers. If you only have guesstimates, that's fine. You can put guesstimates. Just know that your number is gonna be a guesstimate. As with everything, you should have a financial professional helping you in your business to get these numbers. Ideally, a bookkeeper that can give you these numbers every single month, okay? So let's dive in. How do we use this? There is an explanation of each of these lines right here. If you hover over the input here, it'll give you what exactly to enter, but it's pretty straightforward stuff, okay? At the top here, we're going to put your average monthly revenue. Or if you're looking at it for a specific month, just put your revenue for that month in there. So let's say in, I don't know, July, I have 50,000 of revenue coming in, okay? So look at your profit and loss statement, look top line, total income, put that number in. Next, your cost of goods. So if you sell a product or a service on your profit and loss statement, you probably have a cost of goods or COGS line. So we'll put that in here. Let's say in this case, it is 20,000 bucks. Cool. Now, monthly expenses, this is going to be all of your actual expenses that would show up on your profit and loss statement under total expenses, okay? It is not including your cost of goods if you have a separate cost of goods. So this is everything like rent, payroll, utilities, software, maybe your salary if you're a W-2 employee of your business, etc. We just don't want to include principal debt payments. So if you have a car payment or that's on a car loan, or maybe you own your building and so you make a rent payment, or not a rent, a mortgage payment, you just wouldn't want to put anything that is a debt principal. So if it's on your profit and loss statement, pop it in here. So let's say I've got 15,000 of monthly expenses, or in this month I have 15K. Now I get to put my monthly debt repayments. Why does this matter and why does it not go in this line? Well, if you got a loan for $100,000 into your business, you wouldn't classify it as income into the business because you don't want to be taxed on it, right? It's a loan. By the same token, when we pay back a loan, we don't get to count it as a business expense. So we have to pay it back with after tax dollars, meaning we've already paid tax, right? Before we can pay back that loan, so to speak. And so this does not decrease, if I put $5,000 here, it does not decrease how much I get to save in taxes. That stays the same. Cool. So let's pretend I've got $1,000 of principal debt repayment. And for this one, you can either ask a bookkeeper, you can look at your numbers and say, how much do I pay back to old debt every month, right? Whether that's an old credit card that you've been carrying a balance on for a while, or you've got, bank loans or lines of credit, or maybe you bought a business and you're paying back the initial owner. There you go. Put it in there. Finally, if you are a W-2 salaried employee of your business, which usually is the case for someone, if you are taxed as an S Corp or maybe a C Corp, you'd probably have a W-2 salary. I want you to put your take-home pay from that salary. So how much actually hits your personal bank account? So go back, look at your personal bank account. Let's imagine that in this example, we have a take-home pay of, $3,000 from W-2, okay? Finally, there is business savings. Depending on the size of business, you're going to be somewhere between 1% if you're not very profitable, or up to 5% plus if you're very profitable on this. Let's put it at, let's leave it at 5% for now. We'd love to be able to save as much as we can into the business. And then finally, income tax savings. So this is not sales tax. It's not business taxes. It is your personal income taxes. And you are going, if you're an LLC or an S Corp or a partnership, you're likely going to be taxed based on the actual profit in your business. And so we save 30% of profit as sort of a baseline. If you are a high income earner, you're making more than like 250K a year, or as a combined household income, more than 250K, you might need to bump this up to something like 35%. If you're barely squeaking by and not making much, we might be able to get away with a little bit less, like 25%, but we'll leave it at 30. That's our recommendation. So now I've got in all my inputs, and now I get to look at the results. So what are your results? Well, monthly profit here of 15,000. How did we get there? 50 minus 20 puts us at 30,000, minus 15 for expenses. There's our profit. Okay. So if you're putting in actual monthly numbers, this should mirror what your net income or net profit says on your P&L. Okay. Next, monthly income tax savings. So we want to save 30% of this right here. So that's $4,500 or close to it. Then we want to save for monthly business savings as well. And what you want to see here, and this is interesting, I want to see why it doesn't say. Why is 30%? Oh yeah, that's right, because it's not 33%. Cool. So I just wanted to double check my numbers as we go here. I was expecting it to be more like 5. Now, monthly business savings is the percentage of money that you're setting aside every month into a separate savings account. We call it a growth account. And we use that money in a couple of different ways. We go through that a little bit in some of our other trainings. But then we get to the big thing that you actually care about. So here's the owner's distribution that you could afford in this month would be $7,000. How did we get there? Well, it's just what's your profit minus your income tax savings, minus business tax savings, minus your debt principal. So if I were to pay off all my debt in this case and I didn't have any debt, it would bump that up by that amount. Cool. So $7,000 of owner distribution plus this $3,000 of W-2 take-home pay would give me $10,000 of total take-home pay in a month like this. Cool. This will now give you an estimate. Whoop, if we go back, there we go. This will give you an estimate on how much can you afford to pay yourself in a given month. If you go use averages, you'll see what could I have afforded to pay myself over the last year, given my revenue, cost of goods, expenses, and debt payback, etc. Cool. Hopefully this gives you some really nice insight. Again, this is designed to be monthly. If you wanted to put yearly numbers in, just know that these yearly numbers would end up being yearly instead of monthly. But then we get a nice little breakdown over here. Hey, here's what is going of the total pie, right? Of every dollar that comes in, here's the percentage that's going to cost of goods. In this case, 40%. Expenses, what percentage? Tax savings as a percentage of total revenue. Business savings, owner distribution, and debt pay down. This one is always interesting to see. Hey, what percentage am I actually paying myself? In this case, you need to be a pretty darn profitable business. 15,000 out of 50 puts us at, 15 out of 50. That's a 30% net margin. So this would be a very profitable business, but we work with plenty of businesses that are at that level. If you're like, this is all great, but I want to get real clarity, deeper level on my specific numbers. That's what we do in CEO Finance Academy. We got to a spot where we realized we actually got really good at helping businesses make money as we ran a marketing consultancy, and they couldn't keep it. And that's a problem. So if you think that the next level of paying yourself just means, well, I just need to increase revenue and that will by default change my situation, that's often not the case, because as you make more money, you give yourself permission to keep spending more. And we know that expense creep just keeps growing and growing, and it can get out of hand. So if you're at a spot where you feel like, I want to understand my cash flow much better, I want to understand how much I can pay myself. Maybe I'm sitting on a pile of cash in the business and I don't know what to do with it and how to allocate it correctly. Maybe I've got back taxes that I owed for past years because I didn't save appropriately. Maybe I just want to really have a handle on my numbers so that I can make better decisions. That's a deeper level. If that's something that interests you, we walk you step by step through how to set all of this up in your own business and give you the real insight into what's happening so you can make the business into what you really want it to be, rather than just the default of what you get if you just keep staying on autopilot. So if you want that, click here. You can book a free 15-minute profit clarity call with us. It's not a sales call. We're going to sit down and see where are you at in your business. If you're at a spot where it makes sense to work together, we'll schedule a follow-up to deep dive into that. And if you're not, we'll look at what is the next step either way of what you should be focusing on in your profitability. Cool? Book that call. We'll see you on the other side. And hopefully this tool ends up being a useful part of your arsenal as you look at paying yourself every single month.